Hi, everyone, and welcome back. Happy Friday. It is time for another AdvisorShares AlphaNooner. Today, we're very excited to welcome back Sammy Armenia, VP of Corporate Development for C21 Investments. We're going to spend some time talking about the cannabis space at large, digging into the company a little bit, as well as sharing some good highlights from their recent earnings. And of course, if you're out there and you have any questions, we definitely want to invite you in to ask those questions in the comments, and we'll try to get through them as we go. I know the cannabis space is always rapidly developing. There's a lot going on all the time. So if you have those questions, it's a great time to kind of put those forward. So good reminder if you're out there. I see some people in the comments already, which is great to see. With all that said, Sammy, how are you doing? How's your Friday so far?
I'm doing well. Hi, Mackenzie. Doing well. Looking forward to chatting about the space for sure.
Yeah, there's a lot to talk about. So I feel like I know it was about a week ago. What'd you say? Oh, I was going to say, I know it was about a week ago, but I did want to just start with kind of quickly touching on some of the earnings highlights from last week, just because I think they were solid. Would love to just kind of high level cover those, and then we'll kind of work through kind of a company perspective.
Okay, so they were preliminary earnings because March 31st is our fiscal year end. So the audited numbers are coming out in June. But we tried to share as much as we could down to kind of free cash flow. So the quarter was really strong for us, and it's kind of bucking the trend. I mean, seasonally, that calendar Q1 is usually the weakest quarter, and we saw growth in all three of our stores. And so, we tried to highlight that in the news release. It's almost surprising because even, historically, we've felt that seasonality in Q1, and we're really proud that we're bucking that trend. So we did 8.1 million top line revenue. That was up 3%, 3% quarter over quarter from Q3, and 24% year over year. We don't have a traditional year over year yet. That will start in Q1 in this coming quarter, because we moved our year end from January 31st to March 31st last year. So we only have like a 2-month stub in that period, unfortunately. But if you compare to last year's Q4, which was a January 31, it's up 24, 25%, something like that. Our transaction growth was fantastic. We grew 38% over the year in transactions. All of our dispensaries grew every quarter for the entire year. So we're very proud of that. If you go to the more profitability numbers, our free cash flow was up, our EBITDA was up. We're feeling really good about where we are, and we're feeling good about the M&A that we did last year and how that has helped drive the bottom line for us, and we hope to do more of the same. So it was 8.1 million revenue. I think we did 1.7 EBITDA, 1.6 free cash. Gross margin was 45%. There's a table in the news release for the last 4 quarters. You can kind of see the growth over the year.
Yeah, no, again, I think fantastic numbers to post kind of generally and on top of and in spite of maybe the kind of seasonality element. Yeah. I know that's not taking into account kind of the warmer weather we're seeing now, or 420, kind of the traditional holidays that really boost those sales. So that's really great to see.
And winter in Reno was actually pretty rough this year. So.
Oh, really? Yeah. Oh, so even all things considered. Okay, fantastic. Anything that you would sort of chalk that up to? Because I think I had also seen there was a number where I think transactions were up around just under 40% or something.
Yeah, transactions went from 125,000 to 170-ish thousand and 75,000 over the course of the year, which is, and that's quarterly transactions. So I think we're up to kind of a 700,000 transaction run rate right now. Most of that's driven from the new store. Talking about that new store, we purchased that from Deep Roots last year before Deep Roots became part of Vario. And, what we've done with that store has been dramatic. We've generated over 100% same store sales growth since our first operating month, which was July 24. I think it was doing a couple 100,000 a month. Now it's up to 600,000 a month. So really proud of how we've driven growth in that store. But our legacy stores have also grown transactions dramatically over the year. So, the whole machine is working right now for us.
Yeah.
We're not feeling maybe the industry pressures of intoxicating hemp. I think if I had to put my finger on why, It's because we're kind of a price leader. We've always been a price leader. We offer a really enjoyable customer experience in our stores. If you look at the Google reviews of our new store, I mean, it's like 4.8 or 4.9, but everybody says how the bud tenders are, recommendations are amazing, and the location, and the experience, the selection, price. These are the things that kind of make our Silver State Relief, work as well as it does. And the fact that we are able to be profitable and generate cash in a world, that mature market, we are selling eighths in the $20 range. So, it's easy to make money in the $60 eighths world of some of the, limited license states. But, in a mature market that has seen that kind of price compression and is now, I don't see a world where hemp can really siphon off that customer because of the experience of, the dispensary, and, price is right. So I'm thinking that's why we're holding up so well in this environment, in the industry. But
Yeah.
it's not without its challenges. I mean, if you think of taxes, there's a 10% excise tax in Nevada. There's a 15% cultivation tax, obviously 280E. So it's a lot more difficult to generate profit in state legal cannabis than it is obviously in the intoxicating hemp world that's not regulated and not taxed.
Yeah, so maybe a little more insulated in the market, which helps generally, but of course not free of issues. Every market has its own, specific quirks, but then ultimately being able to bring
and because we're not forced to deal with the tourism in Vegas and some of the decline in tourism in Vegas that we're seeing in some of our peers. Some of them had reported tough quarters and pointed out that the decline in tourism in Vegas has really hurt the bottom line. Also, intoxicating hemp has a really unique advantage in Vegas because it can service the Strip. It can go directly to the hotels and the casinos, and the state legal cannabis is not allowed. So they've created a really backwards environment in Vegas. I hope they fix it. And it's tough for the Vegas operators for sure to navigate that. And we're seeing that in the numbers. So
again, I think very good to be insulated from that. And again, being able to drive that positive experience and not have to compete with something like hemp, just because I think it is a difficult kind of beast in its own kind of thing as well.
Sure.
Definitely agree. I think a lot of people would choose the legal side of things over hemp, but I think a lot of areas don't have access, unfortunately, yet to cannabis. So I think that's
right.
what they're still grappling with.
That's right. Yep.
I know in Texas recently. But all right, well, so then it sounds like great numbers you're posting. Seems like you're seeing a lot of growth, which is great. It's great to see that on the fundamental side. Would love to know how that kind of translates into, company perspective, because I think there's been a lot of debate still over, do the fundamentals matter right now when you're kind of investing in stocks in the cannabis space? What can you kind of tell us about that high level?
Yeah. I mean, companies can only control what they control, right? So when you talk about investability in cannabis, it really comes down to, more than anything, sustainability. And what we've seen in the news lately is that the companies that haven't been sustainable are now starting to feel it or even go under. And it's very unfortunate because a lot of what's happened in this industry is not necessarily self-inflicted, but some of it is. Some of it is, unfortunately. And if you think of our history, where we kind of pivoted to focusing on debt repayment and kind of lowering our net debt in the world where everybody was chasing growth a few years ago, we were heavily criticized for that. And in fact, it ended up being what saved a company like us and turned us into one of the only companies that's growing now. It's that we did things backwards, basically, or the opposite way that everybody else was doing them. So we paid off.
For that really quickly, what sort of gave you the concept, the strategy to take that differentiated opinion and say, we're not going to go crazy on the growth side. We are going to kind of really shore things up from a company perspective.
Smart leaders.
Okay.
Smart leadership, Bruce and Sonny.
Okay.
Yeah, experience, right? The experience that Bruce has, 40 years in capital markets, the experience that Sonny's had running businesses in Nevada. They knew that, the path we were on wasn't sustainable. It's why we got rid of Oregon. And focused on, just making sure that our business was sound, sustainable, and positioned well for growth. And, that was the approach we took. But it wasn't easy. We paid off 30 million in principal on that senior debt. In a world where everybody, even the smaller operators like us, they were expanding states. They might have been single state operators that were profitable, and they used leverage. Bruce's favorite saying, right? Tier 2s are just tier 3s that over leveraged for growth. So, they used leverage to expand into new states to chase growth. Some use stock to do that. One of the peers in Nevada used stock to do that. And if you look at the results, there's been a material decline in the fundamentals of those names. So, not all growth is good growth, right? And growth at any cost comes with a price. We've seen that time and time again in this industry. We've been very measured, obviously, maybe too slow for some people in our growth. We started with that Deep Root store last year. We made sure we structured something that was going to be accretive to both our existing shareholder, that we knew we could apply our model to and generate additional kind of organic same-store sales growth. And we think it's a repeatable model. So we intend to do it again. We're not allergic to outside of the state, but we're also not looking to marry somebody else's problems. So we have those conversations all the time. I get asked all the time about that. If there was a silver state relief somewhere else that's, a sound business, free cash flow positive, isn't saddled with, a noose of debt around it, of course we'd be, willing to entertain those types of mergers, right? But our focus, we made it very clear that our focus is just rinse and repeat. We have a very large facility in Nevada that isn't fully scaled, right? We've only built out 40% of it. So we can kind of rinse and repeat as long as the runway is there in the state, as long as there's additional retail doors that we can acquire. So it's how we see, there's inorganic growth, which we did last year. There's organic growth, which we talked about earlier with the same store sales growth that we showed every quarter over the last year. If you think about where can a company apply its cash, whether it's free cash, like a company like us, Green Thumb, the companies that have free cash. We have an active buyback. We bought back over 2 million shares in February that we announced. We also have an NCIB. If you look at that news release in February and the share count, and you look at our share count now on CSE or OTC, you'll see it's down because we also have the active NCIB. So that's one place a company can, we think that we are value here. So, we're buying our own stock. You can apply it to more inorganic growth, M&A. It's really tricky in this industry. We've seen a lot of M&A, especially the larger scale M&A, hurt companies. If you think of the Trulieve Harvest merger, if you think of some of those kind of bigger mergers that really set companies back, you have to be really careful. There's no room to make a mistake in this environment. So it's measured 10 times cut once type of environment. You constantly in those conversations, but unless it's the right fit, we're not going to chase growth at any cost for sure. So that being said, inorganic growth is a place that we can apply that. We did pay some of that transaction off with free cash flow. And then the note that we did on that transaction, we're paying that principal down 4% every month. It'll be paid off next year. So it's another example of us using our cash to pay off principal debt as opposed to just servicing debt, which is a big difference in this industry. Dividends, unfortunately, are not allowed in this industry. So you won't see companies doing that yet. But essentially lowering your net debt, buybacks and inorganic growth are the three places you can apply cash. Some people were commenting in the last day about, spending more on promotion to make your stock more investable, more tradable. Our company focus has never been trying to be a good trading stock. We're focused on building long-term, value for shareholders. This environment is so tricky in the industry, right? Liquidity is really dried up. It's 1%. It's less than 1% of what it was in 2021. If you go back to 2021, we were trading more notional daily than tier ones trade now. In fact, the entire basket traded yesterday. It was something like 3.5 million. We were trading 4 million a day back then. And people made the same comment back then that we weren't liquid because the big guys were trading, tens of millions a day. It's all relative, right? Liquidity is relative. There's nobody in the industry that trades 1% of its market cap daily. So, we are a 20 million, give or take 20 million market cap, and we don't trade that much, but the $1.5 billion market caps are relatively trading as little as well, right? They're as illiquid as well. Now, for traders, obviously, there's a lot more daily volume in those names. So it's understandable that we don't necessarily attract that type of short-term investor. But and it's not that we don't want them. It's that the spend on promotion or hype or anything like that there's no example in this industry of return on that. If you think of the names that have paid for analyst coverage, paid to get their promotion out, their returns are far worse than ours. So, we're going to stick with what we know. There will be a time, I think, for promotion when I think material reform happens and this sector attracts a new investor base. I think it'll be really imperative to get out there and make sure you're reaching a new audience. Yes. But, right now our audience, if you think of what our audience it's the existing shareholders that are looking, to, I'm assuming ensure that the companies that they're invested in are doing things the right way. And also, I think everybody at this point knows that the unlock is material, change, material reform for the industry. We haven't seen very many examples where fundamentals are really changing the game for anybody. Unfortunately, it's very unfortunate, but it's just the reality, right? So it's a bit of a head down approach, right? Just focus on what you do control, which is what I think we've been doing a great job of.
Yeah, no, I think that makes sense. So in terms of when and if, obviously, we do see some real substantive reform on a federal level where things kind of do unlock. It looks much more normal, like a normal investing, theme and sector. I imagine that's when the kind of fundamentals come back in and you'll have those, I think, under your belt to be able to kind of show investors and get that out there. Yeah. In terms of, attracting new names or even people who are maybe on the edges or aware of the cannabis investment, but maybe haven't put a toe in yet, maybe are still willing to put in some small amount in the meantime. When they're able to look across different types of cannabis names, there are a lot of different approaches, lots of different footprints, things like that. Are you kind of making the case and appealing to them to say, consider us as well? It doesn't have to be you only hold us.
Yeah, sure.
What sort of the take there?
Yeah, I mean, I don't either or, right? If you own a Green Thumb or a True Leaf, it doesn't mean you can't also have some capital allocated to a smaller name like us. It's really about who's left that's investable and which companies are sustainable. If you were locked into a name that you can't get out of for the next 2 or go back to 2020, if you were locked into us until now versus other names, I mean, I think we've done a phenomenal job of protecting shareholder value. We're the only public cannabis company that has lowered, paid off its senior debt, lowered its net debt the way we have, and also lowered its share count, right, with the buybacks. So I think we're doing what we can to, build shareholder value that doesn't necessarily get reflected in the stock price at this time, unfortunately. But the hope is that it will when the industry gets its chance again. And really, at this point, it's now who's sustainable and who's going to be there when that day comes, right? I think it's unfortunate. We're seeing some names have, delisted or, go into receivership, things like that. We saw some news this morning that was unfortunate in the sector, and we're going to see more, right? Because if you think about sustainability, it really comes down to, can these companies carry the cost of their debt? And I posted many times on operating profit, right? And why operating profit is so important. GTI, us, and TerrAscend, I think, are the three highest operating profit margins in the sector right now, and we're all under 15%. And we all know the cost of capital in this industry is kind of there, right? So if you've got a 1-to-1 debt to revenue scenario in your name, it's even if you're best in class, it's almost impossible to carry the cost of that burden. And this is all ignoring 280E, right? Which basically the entire industry is doing now. I'm actually working on a table on that off of the Q1 numbers on kind of where everybody is ignoring 280E, applying like a normal business tax to these names, what is the actual profitability landscape in the industry? I think it'll be an interesting exercise. So yeah, it's unfortunate, right? I get the drive to go chase growth because that's really going to appeal to an investor base, but we can go over every instance of those who chased growth, whether they used leverage or whether they used their stock, and the material decline in operating profit. In most cases, they were cash flow positive businesses that now are burning cash, and you've just got to be so careful to not make that misstep, right? So we're going to stay measured in our approach, and it's not for everybody, right? Some people want scale and size and think that that's ultimately what's going to win. There are other types of microcap investors that are, that see the outlier performance in some smaller names, because if we go from 5 million of free cash flow, like run rate, like now, to 10 million, maybe it doesn't seem like a big thing, but in relative performance, that's a huge increase for a name like us. Whereas a larger name, it's much harder for them to say double their free cash flow, right? So that's where some of the outlier can happen in smaller names like us. But the underpinnings of the fundamental business have to be sound, right? So.
No, I think that makes sense. I think it's definitely interesting to look at sort of the larger landscape of cannabis companies. They all have their own strategies, their own sort of, toggles between, more value and more growth. And again, that will reward you in certain environments and kind of be a tougher thing to overcome in other environments. And it doesn't mean, I guess, ultimately.
We are the only company that grew the last 4 quarters, right? So, I saw some chatter, some comments about, how you're going to grow. It's like, but we are growing. We're showing it right now. We showed organic same-store sales growth and inorganic growth. And maybe it's not at a rate of speed that is exciting for some. I understand that, but 25% year over year is pretty healthy growth, right? So if we can just kind of continue the model that we have, I think it's a very successful one that we can rinse and repeat. And, maybe there's a point at which a larger merger makes sense for a name like us, but, our focus is do these things the right way for sure. So.
No, I think that makes sense. And I think, again, for a wide range of cannabis companies, there's been a frustration, I think, with the disconnect of some fundamentals being posted and maybe where the stock is moving. But again, you think in the long term that should kind of come back together if they've been disconnected and dislocated for a while. Again, hopefully we see that.
And even not all numbers are the same. If you think of the adjusted EBITDA problem that we have in this industry, right? Not all adjusted EBITDA is comparable. Some companies have dramatic add backs. And really, a lot of people, there's a lot of people that discuss this. The cash flow to EBITDA or EBITDA to cash flow conversion is really an important number to look at. I was talking to Morgan about that recently. We have one of the highest, Green Thumb as well. But if you're posting 10, 100 million of EBITDA, but you have negative cash flow, like what's your EBITDA? EBITDA is supposed to be a proxy to cash flow, but in this industry, it really isn't, right? In most examples. So the fact that this industry is still using EBITDA as its metric, it's really problematic. It's not going to attract a new investor base. It's not going to attract the broader investor base because that's not how other industries operate, right? So I would love to see us get away from that into more like an operating profit or operating cash flow, something that kind of has more reality to it.
Sure. No, I think that makes sense. Do you think that's something that can change ahead of potentially, federal changes and sort of that more normalization from like a stock and exchange perspective? Or do you think, who's to say? Yeah, hopefully.
If the leaders do it, everybody will follow. That's how I see it, right? If Green Thumb and Trulieve decided to throw, not post adjusted EBITDAs anymore, everybody would follow. So I'm not calling them out per se to make that step. It's where this industry's been from day one. Unfortunately, this got inherited by the LPs, right? Like really, if you think of the Canadian names, and that's what they were using to try to pretend that they had future profitability coming. For some reason, the MSOs, the MSO companies really inherited this and haven't strayed away from it for some reason. So
that's fair. I hopefully think that could be a positive parallel rather than a negative one, because I do think Canada went through such a tough time trying to find its footing as an industry and kind of get it together, and it's really started to see that recently.
Sure.
So hopefully, again,
Green
we're able to
shoots
be
for
in a
sure.
similar
Yeah.
path. And again, they've been able to convert a lot of the illicit market into sort of the legal. There's been a lot of really positive things that I think we've held hope for in the U.S. Again, it's taken a long time, of course, but
If you think
it
of
sounds like
Village Farms or
yeah,
Canara or Oxley, I thought was dead, and now they're putting out solid numbers. I mean, there's a lot of green shoots happening. Rubicon
yeah,
in Canada, it's good to see. Obviously, the bigger names, the Canopies and the Tilrays, are still struggling, right, with not having again investability, sustainability. Like they don't have a sustainable model that's working, right? So, but there are companies that are doing things the right way. It's good to see. I think it helps the industry as a whole, because part of the black mark on the industry has been what happened with the Canadian companies, and the assumption that that's happening now to the U.S. companies, right?
yeah.
And
No,
it's
I think that makes
cases it is, right? This is the Wild West. It's that burgeoning industries. Not everybody's going to make it. Most companies are going to fail. That's the case. It was the case in tech in 2000, right? It's the case in new industries. So again, it's why you need to focus so much, if you are a long-term investor, on the underpinnings of the business, right? The fundamental nature of the business. Is it a sustainable business? If I bought it today, is it as good or better, next year or 2 years from now, or is it going to run into problems on its current path? If it's not generating cash, how does it get from where it is now to that sustainability? If management isn't answering that question in a way that's satisfactory, then you're risking. There's risk in all of us, right? Because there's the regulatory risk and the 280 risk, and there's risk in every name in this industry, unfortunately, right? It's where this industry is, and it's why most of the investors have left the space.
Yeah, no, I think it's definitely been tough. I do think it's, there are areas of the market that you can be a little less choosy in, but definitely cannabis has remained one that you really want to make sure you understand what you own, sort of the combination of what you own and how it all kind of works
We
out.
don't have that meme kind of
Yes, exactly. Which,
following.
yeah, which I think can be for the better ultimately, right? Because I think that can lead to some weird, outcomes with companies that are not as strong, kind of getting carried up, and that kind of can crash through. Normally, I mean, obviously, we're the extreme on the other side. I think where you're very, very held to an insane standard. But yeah, hopefully, as things normalize on the federal side, it's a little bit of the tension is released and you're able to operate and compete in a more normal kind of way ultimately. So we'll have to wait and see on that front.
But I mean, I think it's
And
at this point that everybody faces the reality of where the industry is,
yes.
and doesn't sugarcoat, where these companies are, especially the ones that are saddled with leverage that's, whether it's pending. We're seeing now that the cost of that kind of refi is really at the expense of the equity holder, where the debt often gets converted to equity. Or the refi terms are so dilutive to the existing shareholder. I don't think anybody can really escape where this is. There's just no capital available for these companies right now. So, I implore everybody that's invested in the space to take a good look at the balance sheets of the names that they're invested in and understand what the path is, or what the challenges may be that they're going to face, because there's been too many moments in this industry in the last 5 years where the darlings were the ones that were
Yeah.
suggesting that they had the highest growth, and everybody was chasing that, and it came crashing down. So it's time to focus on real sustainable businesses. I think there is still a stair step to growth in the industry. The biggest would be the putting intoxicating hemp in some sort of regulated framework,
Mhm.
right? I don't think you can put it back in the box.
Sure.
It's too late for that. And I don't have a problem with hemp on its own, right? It's the fact that state legal is overtaxed, overregulated. We have to test every 5 pounds that we grow. All the things that we have to go through and pay for, that they're just exempt from. And then you have the bad actors, right? the synthetics and the dangerous add-ons to some of those intoxicating hemp products that are really, a problem for this industry, because you're one bad, like, vape crisis away, like we had 5 years ago, from putting a really black stain on this industry, right? A really troubling moment for the industry. So
I think that's true. I do think it's sad. It has been, I feel like, from a politician perspective, or even from sort of people who have been more on the prohibitionist side, I think a lot of the criticisms of the cannabis industry, the legal cannabis industry, have come from, I think, the bad actors in hemp in a lot of ways, and just sort of generally the illicit market, like you're saying. I think, there are risks if you have people who are not testing and are not, treating it in a responsible way. I think we've also seen, some packaging that maybe is appealing more towards kids versus
kids,
having really that strong. So I think all that stuff is, it feels like a need for, which we've talked about a ton, but common sense solution. I think just some basic, kind of fair playing field, as well as obviously having that, safety and standards and all those things in there. Which again, hopefully we see. I know we've heard kind of closer to the fall a little bit more kind of murmurs around cannabis and sort of the possible changing of how cannabis is treated from the administration. That seems to have been a little bit more quiet recently. But anything that you're sort of looking at, anything that
I hate
has
to
been
speculate, right, on timelines on whether it's rescheduling, or the dreaded safe banking, or the farm bill and the loophole.
sure.
None of us, we just don't have that insight. We're all speculating, we're all guessing. You can control what you can control, and that's how we look at every day, right? It's just what do we have control over? How can we make our company better until the industry has another chance? Because we've kind of been put in the penalty box, and investors have fled, and capital has fled, and it's up to the managements of these companies to figure out a way to get from here to there. I think we're doing a fantastic job. I think there's other names that are doing a great job, but there are a lot of companies that are in trouble, and it's unfortunate because it kind of weighs on everybody. Even if you think of the mechanics of the industry, right, and the ETF, and there's a lot of chatter about that kind of stuff, but the ETF is really just it's the aggregate of its underlyings, right? And a lot of these underlying names are in trouble and are declining materially in profitability, in growth. We saw quarter over quarter declines in almost every name in the Q1 reports. We're seeing operating profit year over year drop in the bigger names pretty substantially. So, I mean, if you think about the return on invested capital in this space, there's a lot of examples where it's been negative. And ultimately, if you're not generating shareholder value in the moves that you make, it is ultimately going to get reflected in the share prices of these companies. I don't think that this is an efficient market at all. There's just not enough of an investor base to make it so. It's why we all, are trading similarly. But look, there's some mechanics in this industry with the ETF, with arbitrage, with algos that can affect performance for sure. But I think the overall commentary on how that happens is incorrect. I think Bruce has tried to do a really good job of shining some transparency on the mechanics of the industry. He's the expert in it. And I think if people haven't, they should go to his X page and read his long form posts on the on the mechanics of the industry. That's all him and I try to do, is kind of shine a light on what the true mechanics are of the space. So it's, you would hope that a company like us that puts out, good results like we just did last week, it would be reflected with like an efficient, price discovery and stuff like that. Sure. And unfortunately it doesn't happen. And it's really, I think it hurts the investor confidence in the industry, even in a green thumb that has outperformed fundamentally for so long, where it's not kind of rewarded in its performance, right? But if you actually look at all the names, like if you do a 3-year overlay of all the names, you'll actually see, Green Thumb and us have outperformed virtually all the other names in the ETF, right? So there is some element because we've all declined, so it's not like
Yeah.
it's less decline as
Still growing.
opposed to and it's probably because there's the fundamental investor that is behind some of the stronger names and hasn't been scared out of them, let's say, because there's a reason that the business is succeeding, right? So, but
I
it's
think,
not
yeah,
enough.
that's
It's not enough to generate new interest into the space and a new investor base, right? As well, we're declining less than the than the next name. That's not an investment thesis, right?
That is true, but I do wonder, again, I don't know how often you were able to talk to people who might be potential new investors or sort of people in that vein, but I do think it is a story where it has been obviously years and years and years of pain and I think frustrated sort of goals for federal reform or change that we had been promised, I think, by the previous administration. But when you're talking to them, it is sort of, if they were to invest, it is sort of day one for them. Does that resonate with them? Or they, I mean, how much are they polluted or, which is totally fair, colored by sort of the run that we've been on, like you're saying, versus if they were
Yeah.
jumping in
Well, I
now
mean, the dramatic
still.
4-year drawdown has impacted almost
Yeah.
everybody that has put a dollar into cannabis, right? So,
Yep.
I think it's some people have taken their ball and gone home. And will they come back? I think everybody at this point knows that material reform is the only way that the sector has that kind of unlock on
Mm-hmm.
call it a sector re-rate. And
Mm-hmm.
not all names deserve it, and not all names are going to get it. And depending on how long it takes to see that material reform, a lot of these names might not even be in
Yeah.
existence. So I think it's a challenge for the ETF. How do you navigate? How does an ETF investing in cannabis navigate that? Because there's no, to say that the writing's all on the wall for some names. There's no way of knowing if C21 is going to run into challenges in the next 2 to 5 years. Like it's this industry seems to hit hurdles and challenges and turns. If you think of 2020 when COVID happened, our stores were shut down in Nevada. All the Nevada stores were shut down. Not every state did that. I think it was Nevada and Massachusetts, and we had to pivot to curbside for 2 months.
Mm-hmm.
We could only sell cannabis curbside, right? Because our doors were closed. We lost, I think, 12% revenue that quarter, which we think was successful because we managed to
Yeah.
keep the business going. But you don't know when these things are happening, right, in this industry because of the federal illegality of it, and you don't know what this administration is going to do. We're all hoping, based on the promises that were made, that the reins are going to be loosened and that we're going to see rescheduling, that 280E is going to go away, that we're going to get some sort of banking that's going to bring access to capital back. I think we all know that that's the bet here. And, I think there's a lot of people that stay on the sidelines. The investors that I talk to are, there's a lot of people that say, I'm only in your name and Green Thumb. They're picking the companies that they feel are safe. And some are saying, I'm out and I'm on the sidelines and I'm not coming back until I see a reason to. What I find is that there's no more inbounds from the funds that were not ever invested in the space like there used to be. So there hasn't been the overall investor interest, the broad investor interest has declined dramatically. And I don't know if the industry has given it a reason to turn around yet, right? If you look at the fundamental kind of results of the space right now.
No, I
So
think that's true. I think it is a strange sort of divide between what you're seeing in kind of real life between, some new stores, states still technically unlocking from, the past several years. I think it is strange where it's more and more available, more and more sort of, visible ultimately, and sort of proof in my mind that it is a viable thing that people will use, whether medically or recreationally. But
for
I think,
sure.
yeah, it is, of course, if you are sort of have your hands tied behind your back with sort of how the treatment is from the federal government with it being Schedule 1 still, of course you're going to see that disconnect, but I think it is sort of a strange thing. But ultimately, hopefully we see that turnaround again when we do see that federal reform change, and I'm sure that will hit the headlines. And I think yeah, obviously be a net boon for the
Look,
industry.
some of the mechanics, I know people don't want to hear it, but some of the mechanics are the reasons why these companies overshot in 2021. So the good and bad comes with things like arbitrage, right? If investor interest comes back to the space because there's material reform, the capital that's going to come back to the space has access to the big board ETF, and that drives a dramatic increase in the arbitrage trading into the underlying names. And as we saw in 2020 and 2021, all boats rose together on that. There's been some periods where there has been some exit out of the ETF that has caused some pressure on the underlying names, but those have been few and far between versus the inbound or the ETF trading at a premium, which creates buy programs in the underlyings. In fact, Bruce did that post where he articulated over the last few years how much of the interest into the space has been generated by the ETF. So again, read his post if you haven't. I think he does a great job of kind of exposing or being transparent about what the reality is of the space.
Yep, I think not sugarcoating it. I think that's definitely what's needed right now. People want a sense of where things are, where they're headed, a real kind of look at it without, being too pessimistic or too optimistic on either end. So I think that's important. All right, I'm seeing some quick questions. Let me see if I can hit those really quickly as we're going. So a question from Braindead, which is, so if profits decline, investors leave, at what point do they have their turnaround to have investors be attractive? I guess that's, again, probably with federal reform and some of those larger catalysts coming to be ultimately.
What about what we just did last year? Our operating profit has increased dramatically. Our growth has been there. We're paying off, and we don't really have any net debt, but we're paying off the principal on the small note that we have for the new store. There are companies that are figuring out a way. Glasshouse has done some pretty solid results, has put out some pretty solid results. I still think Green Thumb and Trulieve have really strong fundamental businesses under them. TerraScent, let's talk about what they've done. In Q1 2024, they had a 7% operating margin. In Q1 2025, it's 12.5%. So there are companies that are actually increasing their margins in a price compression world, which is mind-boggling because it just shows that companies are really focused on efficiency, driving costs down, finding a way to be sustainable businesses in this environment. And there are examples of companies that are doing a great job of it. So will that be reflected in stocks? Likely not. And so the question is, do you make a bet or do you take a bet or do you reposition your bet on cannabis in those outlier examples of companies doing things well, or do you just sit on the sidelines and wait for a reform signal that brings interest and investment back into the space? Everybody has their own way that they want to approach this stuff. I'm not going to give advice on investing in cannabis, right? But if you look at us, we've kind of toggled between a 17 and 25 million market cap for as long as I can remember, right? Mm-hmm. So at some point, there is a fundamental kind of floor or underpinning to these businesses. And it's up to investors to determine, is that a good time to, put a bet in, or is it still better to just wait until volume comes back, interest comes back, but these companies become more tradable, especially if it's important for people to get in and out of, or have the ability to get in and out of a name, right?
If they're not in it for a super long period of time, if they're in it
right, because like I said, the entire combined notional of the space is under $5 million daily right now. So there's just not enough trading in the space for it to be a tradable space.
Yes. No, I think that makes sense. All right. Quick other questions. I think last two, which kind of tie together. One from Stevie, which is, what do you think the future holds for edibles and beverages? Thanks for the good question. Any thoughts?
I'm hoping that there's a carve out in whatever Farm Bill 2.0 or whatever however they address the loophole. Everything I hear is that there'll be a carve out for beverages. I think it makes sense for hemp to have the beverage space, or that makes sense for state legal cannabis too. I also think beverages will ultimately be, the big monster CPG beverage companies will if there is a business that is profitable and sustainable in cannabis beverages, the large CPG companies will own it. There is zero chance that little small, we're all micro caps, we're all tiny companies, right? That any of us have it's a very cost intensive business, beverages. And I don't think any of us have the ability to kind of scale into that beverage where any of those CPG companies could just come in and, either buy what exists or run their own with the distribution and the beverage plants that they already have. So
that makes sense. If that does happen, though, does that sort of widen or make the pie larger generally for people who are interested in cannabis, whether that's the range between flower or that is sort of more on the beverage side? I would imagine it opens up people who maybe haven't tried cannabis before and get into it through something more familiar, like a drink, and then maybe move up into other things.
Yeah, I think there was a recent piece by Marijuana Moment, I want to say, that said that men are gravitating to flower and women are gravitating to edibles and beverages. It absolutely opens up additional, it's part of the normalization of cannabis, right?
Yeah.
Different form factors, whether it's for recreational use or medical use, the ability to have additional form factors is, only positive for the industry. The larger the net that we can cast, right? Whether again it's for medical or recreational purposes, and whether it's finding an edibles and beverage expansion through non-cannabis companies, the more the merrier, right? I mean, the real challenge has been that those companies, for the most part, have not been investing in the industry, right? You've had some Canadian companies that have had that investment, and some of that investment has gone really poorly. If you think of Canopy with Constellation, but you're still seeing some with some tobacco, the tobacco companies have invested in Canadian companies and things like that. So look, tobacco and alcohol are in big trouble. They're both in decline, and cannabis is I think the vice that has the most growth moving forward for the next 10, 20, 30 years, because it's a safer alternative. It has the medical value to it. We're waiting for the government to stamp that, but we all believe it. And the 252 pages of FDA HHS research stated it. So I'm looking forward to the day where the form factors are such that I can take, I see those level pills out in, I think it's California, where they're just cannabis pills for pain, for like, I would love access to that kind of thing instead of having to take a Tylenol or, as a much safer alternative to the big pharma solutions for things like chronic pain. As you know, I had a bad accident a decade ago, and I have spinal injury. So that's why I'm in this industry, right? As I'm looking for the safer alternative. And I truly believe cannabis is that. So, and I know a lot of our, audience and a lot of people in this industry believe the same thing, right? So.
No, definitely agree. I definitely think the demand is there, the data is there, like you're saying, and hopefully we see sort of that common sense finally embracing of it. So hopefully, fingers crossed, we'll see that on the timing. And then final question from Noah, actually, which is any product that you highlight. What's doing well? How are products? What's selling?
In our stores?
And your stores.
In Nevada is an interesting market. The price compression has been pretty dramatic. It's now stabilized for the most part, but there was flower decline, there was vape decline, pretty dramatically if you look at the headset numbers. In our stores, flower and our Phantom Farms flower and our hood oil vapes are still the leading products that we sell by far. So that's what the customers still want. That kind of repeatable customer, at least. I still think that the broader population's exposure to cannabis is not going to be in those form factors. Whether it's, seniors using it for sleep or chronic pain, I still think that expansion of alternative form factors for that is going to be the way that we increase the total addressable market for cannabis. But right now, I'm not seeing any of that translate in our stores. So
yeah, okay, that makes sense. I think eventually, yeah, every sort of type of customer will have their kind of tailored product or tailored form factor. I'm not surprised really that vapes are doing well, just because I feel like they have become so popular more on the tobacco side, but also people are trying to maybe transition away from tobacco, that could be something that they're familiar with and
yeah,
also would want to move towards. So not surprising on that front. All right, well, fantastic. I think the only other question that I'd seen was sort of around weekend plans. So I know I don't know what you're doing this weekend, but I know next weekend you've got some exciting travel headed to Chicago for Benzinga.
I am, and I'm on a panel on the Tuesday, a growth in taxes panel, which will be interesting. That Elliot's put me on
Nice.
to discuss how kind of companies navigate growth with the kind of punitive tax regime of state legal cannabis, which I was talking about earlier, right? Excise taxes and cultivation taxes and heavy income taxes with 280. How do you navigate growth in that tax?
Yeah, that'll be awesome. System.
So
Yeah, that'll be great. Well, we'll be out there too, so hopefully we'll attend that session and try to, post something or do something while you're there, because I'm sure there'll be some great insight on that front. So looking forward to that. That'll be great. All right. Well, everyone, thanks for joining. We really, really appreciate it. I hope you enjoyed. Sammy, thanks again. Really, really appreciate you spending some of your Friday with us, and enjoy your weekend. We will see you next week. Thanks much.
Before investing, carefully consider the investment objectives, risks, charges, and expenses found in the prospectus, available at AdvisorShares.com.